2020 is coming to an end. It's been quite a year on many fronts. Every year we sort of go through the checklist of tax items and planning items that individuals should be thinking about as we go into 2021. So let's start with from a retirement plan perspective. What are the things that you should be thinking about as you head into 2021?
Yeah, 12/31 marks the deadline and when you can make a lot of these changes or contributions to these different types of plans. So it's important as you have a little bit of time here to make sure that you're maximizing first and foremost your 401k. That's where you can put in $19,500 into your 401k. And if you're age 50 and above, you can put the catch up of another $6,500 on top of that. That's your own money that you can put in. Any company match that you do receive is above and beyond that.
Mm-hmm.
In addition, you may have an after-tax component to your 401k available. If you do, this is another opportunity to put money above and beyond those IRS limits that I just mentioned, and potentially even be able to convert that from the after-tax 401k to the Roth 401k.
In terms of a Roth 401k, a lot of people ask us, should I be contributing Roth or Pretax? How should they be assessing that?
Absolutely.
Right now?
That's going to be a very personal conversation, but if you start to think about, even the proposed changes of what the tax brackets might look like, your pre-tax contribution may become even more powerful to avoid that upfront tax. But just from a concept standpoint, if you're younger and you're just starting off in your career, this is an opportunity that you may want to evaluate Roth because you may be at a lower tax bracket today. And plus, that money has a lot more time to compound in that tax-deferred vehicle, and it makes more sense to prepay the tax up front. You can make up for that tax longer term. But going back to the tax rates and how those are going to adjust, that's where you want to start looking at this of where you're at today versus where you might be pulling that money out and what your tax rate might be at that point. So if you think you're at a higher tax rate today than what you might be once you stop working in retirement, then it makes a lot more sense to do pre-tax. Vice versa, if you're going to be at the same or maybe even a higher tax bracket once you stop working, then it would make more sense to do Roth today.
Great. So let's move to taxable investment accounts as we move into 2021. Like we've got about 2 months left. What should we be thinking in our taxable accounts?
Yeah, this is where you want to start looking at what losses you might have in the account. This is a great opportunity. We always say it's just as important to maximize your gains, but also to manage your losses as well. Because if you've realized some gains throughout the year here, this is an opportunity to offset those with some of the losses within the account. So if you have a $10,000 realized gain in the account and a $5,000 loss, you can sell that loss to minimize the potential tax burden that you're going to pay at the end of 2020 here.
What about on the charitable side?
So from the charitable contribution standpoint, 12/31 is the deadline to make any charitable gifts that are going to impact your 2020 tax return. We see a very common approach is just writing cash or putting the donation on your credit card. Well, as we go into the end of the year here, something you might want to consider is just looking at some of your highly appreciated stock. You do have the ability to gift long-term capital gain stock to your favorite charity or potentially even a donor advised fund. The benefit there, it allows you to avoid the capital gain that you would have paid if you're going to sell that. The organization that you're gifting to does not pay the capital gain. And then if you want to maintain that position, you can buy that stock right back the same day or even the next business day to create a step up in cost basis on that position.
In terms of required minimum distributions, any thoughts or ideas moving into 21 there?
Yeah, so 2020 was a year that, based on the CARES Act, there was no required minimum distributions. So that's a big year, but also between now and the end of the year, still creates some tax planning opportunities. Not only from looking at being in a much lower income tax year, there might be an opportunity to pull money out of your retirement accounts if you're of age to do that at a very low tax rate. Because with the required minimum distribution, that's going to force you to take money out and potentially push you in a higher tax bracket. So we've had a lot of conversations around maybe taking a smaller amount out this year, or even converting some of those dollars over to a Roth IRA that you would have been forced to come out in the coming years.
And then just as sort of a closing thought, what are some of the things that individuals should also be looking at as they approach the end of the year going into next year?
Yeah, just making sure that you're maximizing, all of your savings opportunities, maximizing all of the deductions that you have available to you out there, but then also start to look into 2021 just to set yourself up for success from not only a budgeting standpoint, but a long-term financial planning standpoint as well.
And from an estate standpoint?
So from an estate planning standpoint, there's a lot of proposed changes out there, potentially even accelerating the reduction of the estate tax limits. Right now, that's over $11 million per person. That's looking to be reduced based on some proposals out there, and that could be effective as early as 2021. So this is the opportunity that you want to look at to potentially even shift some money out of your estate, if that makes sense from a long-term planning standpoint. As we always say, you don't want to give away money that you're ultimately going to need just to save taxes at some point down the road. 2020 has been an unprecedented year. Obviously, we're almost at the close here. You want to make sure you're at least maximizing all of your opportunities here. But going into 2021, we're going to be focusing on making sure that we follow all the changes and the proposals that are out there. Obviously, the big question right now is what's going to happen with the election. So as that evolves, we're on top of things, and we're going to make sure that we're communicating all the effective changes with our clients and potential clients out there today.
Great. Well, Neil, thanks for joining and sharing your thoughts, and we appreciate the feedback, and we will look forward to future video updates on any changes.
Absolutely. More to come. Thank you very much.